Good morning. Welcome to the XM.com weekly market update. And with me again is Peter McGuire, the CEO of XM. Good morning, Peter.
Good morning, Andrew.
Domestically, Australia, the unemployment rate came out last week, so it's jumped up a little bit to 4.1, which ironically will probably make the Reserve Bank happy.
I would say so. That's what they're after. They want that number to increase, and as we're going to, I think, experience over the next 6 to 8 weeks, or probably 6 to 10 weeks, do we see any form of rate cut? Do we see any form of rate increase from the Aussies? And it's a difficult one to call, but that number is certainly ticking up when you look at it since February. It's heading in the right direction for them, but certainly not in the right direction for the man and woman on the street.
Yeah, and you think, does that eventually flow through to the inflation numbers, which is the concern at the moment?
That's right.
Where it's so
less spending.
Time will tell. Aussie dollar is up quite a bit. So
Yes.
we look at where it was only back in March. So it was nearly close to 64. So,
That's right.
And it's jumped a lot more so on the weakness of the US rather than anything else.
Yeah, exactly. And I tell you what, it's been an enormous rally over the last couple of weeks. Really strong, very, the best part of 5.25. Oh, pardon, no, not that much. Probably around about 4.5% up. And it's been a great rally to be a part of, and probably you're going to see a little bit further upside. I'm not sure if you're going to test 68, but at the moment, there's certainly one-way traffic.
Sure is. China, CPI numbers came out also. We've got 3 months of rising inflation in China, which is probably a good thing, considering if you look at before
That's right.
that, they were in a fairly terrible state, actually. So the economy there is not great, and the property market is still in
very
a lot of
anemic.
trouble. But I think by getting the CPI up a little bit, maybe that's a step in the right direction.
Absolutely, and you've had very strong rally for some of those Chinese equity markets, especially the CSI 300. So, considering where it was in January, February, and where it is now, it's been a really nice start to the year.
Gold.
Wow.
The market darling. So we just look at this. This is just a couple of countries that have been obviously purchasing gold. So it's flattened out a little bit, but it's still very strong demand.
Yeah.
And if we actually look at the gold price, then, it's nearly sort of pushing all-time highs again.
Yeah, it's been again, as you said, since the start of the year, start of the month, it's been, again, very, very solid push-up. And if you're putting your mind back to, where it was in October, it's one-way traffic. The best part of 35% up since then. So let's just see what happens over the next couple of weeks. Fed policy, what's going on, but it just seems to be a very, very solid, push up. Silver's had a big rally as well, and is 2,500 on the doorstep.
You would think so, the way it's been progressing the last few weeks.
Yeah, Bitcoin was up $6,000 in the last, 36 hours.
Wow. The US, the CPI number came out last week, so it dropped by 0.1%, and the equity markets loved it.
Oh, they were cheering from the sidelines, and there was, when you're looking at the Dow, 40,000 last Friday. So that was, record territory. S&P, I think, is at record. Nasdaq's probably close to record. We're nearly at a record. So, yeah, it's... it's coming down, and it's coming down ever slightly. And is the Fed going to cut rate by September? We've just got to see how sticky it is over the summer period, and naturally how that plays into decisions.
Yeah, and I think...
and an election.
That's right. So we look at retail sales came out as well, and they were flat for the month, which is not a great sign. So earnings season is more or less behind us now. Obviously, the big tech companies performed really well again, but those consumer discretionary and consumer
The
staple
Starbucks.
stocks, they were
They're
not
coming under
horrible.
pressure.
They weren't horrible numbers, but the rhetoric coming from management was they are seeing consumers
Downturn.
rein things in a little bit, which makes sense if you look at these retail sales numbers. So is that the first sort of step that we might be seeing a little bit of a slowdown?
You would think so. And as you know, you don't need to be a rocket scientist. It all comes down to the health of the consumer and how much spending power they've got and whether they can buy your goods or services. And if they're tapped out, they're tapped out. I know credit card debt's at all-time high, so these are all impacts, and you've got high rents and cost of living. So there's only so much you can wring out of a pay packet if you haven't had a pay rise.
That's right. And it's sort of interesting, like what the Fed said as well. Like they're basically sort of saying that a rate cut's coming in September, which is, I think, unusual sort of talk where there's no guarantees here. Like if inflation was to pop up again, there's no way they're going to drop rates.
No.
and it's not even close to 2% yet. So,
No, exactly. So they're hanging on it, and we're just it's a discussion point. Every single TV anchor asks the same question, and no one knows the answer at the moment. But you've got so many differing opinions as far as these Fed presidents. Loretta Mester, Pat Harker from Philadelphia. You've got Kashkari. All of these guys have got, again, they've all got differing views.
Yes.
Oh, we're going to put rates up. We're going to put rates down. We're not going to touch them. So. Yeah, let's just wait and see how summer rolls.
Yeah, no, it doesn't help, does it? So
No.
But all right, we'll keep an eye on things, and we'll catch up again next week.
I look forward to it. Thank you, Andrew.
Thanks, mate. And that's the XM.com weekly market update.